Hey everyone, happy Thursday, August 21st. It's about 9:20 in the morning on the West Coast, and it's time for another market update. Well, this week there's quite a few pieces of news that have to do with the Fed, so I put them under one headline. So, first thing that's going on right now as we speak is the Jackson Hole Symposium in Jackson Hole, Wyoming. That's where a lot of the different, Fed groups from around the world, bankers, things like that, get together, talk about rich guy stuff, I guess, or rich guy and gal stuff. And then at the very end, though, on Friday, Fed Chair Powell will give a press conference. And often in the past, they've used this press conference to kind of telegraph what they're thinking, what they'll do at their next meeting, and so forth. So there'll be a lot of importance put on that press conference, and that's tomorrow morning on Friday. So you might see the markets move based on what he says there. If he comes out and has a more dovish tone and talks about cutting in September and cutting in October and so forth, market's going to love that. If he comes out and talks about tariffs and inflation and maybe we won't cut, that's what the markets will not like to see. So that's the first piece of news out of the Fed. Second one, yesterday we got the minutes from their last meeting. It was, and these are non-newsworthy. Who really cares? But since it's already passed and done. We're already down the line. It's been a couple weeks since they even had that meeting. But the thing that made this one a little more interesting was two members had dissented at last meeting and had said no, we want to cut rates now, which hadn't happened in quite a while. So looking at the minutes, it was just Waller and Bowman that really seemed to be forward thinking. Were more concerned about what would happen to the economy and less concerned about tariffs and inflation, whereas everybody else seems to be still really caught up on the tariffs. So not the best thing to see. Just we would like to see a little bit more of a hesitancy on some of the other members, but they all seem to be very caught up on tariffs, what they're going to do in the future, and so forth. And again, tariffs are still a big deal. Still a lot of news coming on that. I saw that we finalized the deal with the European Union today, which is good news, but there's still some undecided stuff like with China, which is pushing that decision, and the market's kind of hesitant to make a call on what's going to happen because they haven't gone fully in effect yet. So it would actually been better for us if they just ripped the band-aid off and move forward with whatever the tariffs going to be with China and just done it. But since we keep getting these delays and extensions, we're just kicking that down the court a little bit down the street until we have to deal with it in the future. So right now the markets really don't know what that's going to come of that. The last piece of news about the Fed you might have seen in the news is that the FHFA head, Bill Pulte, came out with some allegations against one of the Fed governors, Lisa Cook. The president, asked for her resignation. It sounds like it has something to do with possible mortgage fraud, and primarily, as far as a primary residence versus second residence versus investment or whatever it may be. A very common thing in the mortgage industry. People want to buy a house. The rates are better for a primary mortgage than they are for second homes and investments, mainly because banks and lenders trust people to pay their primary mortgage before they pay some sort of second home, vacation home they have. If bad things happen to them, they have two mortgages, they're going to pay their primary because that's where they live all the time. They're going to pay that one first. So generally, second homes and investment have worse terms, worse rates, more costly, things like that. So people sometimes try to commit mortgage fraud to get that non-primary home set as a primary home so they can take advantage of those rates and so forth. So that's what she's being accused of. She's denying it. Again, just some of this drama that's going on between the administration and the current Fed. Obviously, the administration wants them to cut rates. Lisa Cook is one of the members that is voting not to cut rates. So interesting to see what happens there, but more drama on the Fed side of things and more to come with tomorrow's Jackson Hole meeting. So that's the big thing, is the big market mover is going to be tomorrow. Next thing we got, going back to last Friday, we got July retail sales, and this was something not necessarily positive for us, and it showed consumers keep spending. It was up, month over month a little bit, but I think a half a point. But the main concern was really that they made a positive revision in the previous month, all the way up to I think 0.9%. So that was what the markets kind of reacted negatively to. Ideally, we'd like to see the American consumer stop spending money and be worried and not want inflation and not want tariffs and things like that. Because if the economy starts to slow down, because our economy is driven by us as consumers, if the economy starts slowing down, the Fed would be more inclined to cut rates. And again, that's what we all want. We want the Fed to cut rates so we get that trickle down effect and mortgage rates start dropping and we start seeing more activity, and it's a better deal for borrowers and so forth. So retail sales did increase. Consumers seem resilient. We all keep spending money, not necessarily the best thing. So, got to keep an eye on that stuff because, again, that drives our economy. And stronger our economy is, less chance we're going to get a rate cut. Next thing, July starts in permits. We always want to look at this because this gives us an idea of future housing. So as you can see, permits were down month over month. Starts were up a decent amount month over month, and they're really the only one up year over year, almost 13%. Everything else year over year is down quite a bit. So it's good to see that starts jump so much. That means compared to at least to last year, we are seeing more houses actually starting construction. Not necessarily completed, but at least they're starting. Generally, once something gets started, it gets finished. However, it's still at 1.43 million. That's still lagging behind most indicators that show what future demand is going to be. So this is our future supply. Once these are all done, that's supply that's going to hit the market. But future demand is more in the 1.7, 1.8 range. So we're still lagging behind what we kind of need to get caught up to have a little bit more surplus for housing. But so these numbers continue to be pretty price supportive for current homeowners. So good for current people, good for equity, not so good for people who want to see house prices come down quite a bit. Next thing we got today was July existing home sales. They were actually up more than expected, but still low, comparatively over the, especially compared to normal. So those come in at 2% month over month. It was expected to be a little bit of slight decrease, up about 0.8% year over year. But again, last year wasn't great either. Meaning home price dropped a little bit month over month, still up a little bit over year. And that brought, inventories up to about 1.55 million in July. That brought our month supply to 4.6 month supply. And that's right in line with kind of like what we consider a normal market. So it's a pretty balanced market there across the country right now. Obviously, some pockets are going to be different than others, more availability, less availability, and so forth. But we're kind of getting that balanced market. And again, in some of the places where it's switched to a buyer's market, that's, even though rates are higher, it's still an advantage for you as a buyer to have a more willing seller, to have less competition. So agents, borrowers look out there looking, just keep that in mind. Everybody wants a lower rate, but the higher or lower rates go, the more likely we're going to see more demand. And the more demand usually means higher prices. And so forth. So again, existing home sales are up better than expected, but still we want more activity. And obviously rates have a lot to do with that. Next thing, initial jobless claims came in at 235,000, up from last week, up from the estimate of 226. Still pretty low though. Continuing claims jumped to 1.97 million. I think that's the highest in cycles since 2021. So again, it just seems like people are having a harder and harder time getting a job once they lose their job. So where does that leave us? Average 30-year dropped to 6.56. We went up a little bit over the last week, 6.62. There was some more comments today from one of the Fed members basically waffling on whether they cut in September. Obviously, we didn't want to hear that, but kind of still stays, closer to the 6.6 number. Didn't give up a lot of our gains, but definitely ticking up, and a lot of that has to do with that next Fed meeting. That's taking place on the 17th. Right now, last week that was about a 90% chance that they would cut rates. Yesterday it was about 82% chance. Today we're down to like 73. So the chances of that cut, of the markets betting on the Fed, cutting their rate coming up on the 17th, has kind of slowly dropped off a little bit. And again, a lot of that has to do with some of these comments from these Fed members. So tomorrow's meeting at the Jackson Hole thing, when Powell talks, is going to have a big importance of that. And then after tomorrow, it's all going to come down to this inflation numbers, the next jobs report, another inflation report before that meeting on 17th. So interesting week. Like I said, we got to keep our eye on what the Fed says tomorrow, what Fed Chair Powell says tomorrow, and see where short-term rates go. But otherwise, good to see us not give up too much of the gains from the last couple of weeks. If anybody has any questions, please don't hesitate to reach out. Otherwise, have a great week, everybody. Thanks a lot.